Hi, everyone, and welcome to GLF Live. I'm Gabrielle Lifton, the editor of Landscape News for the Global Landscapes Forum. And today we're going to be discussing a new report on green bonds and what the findings mean for landscapes, ecosystems, and climate change. But before we get started, I have a bit of an exciting piece of housekeeping to announce, which is that the Global Landscapes Forum is hosting a 2-day digital conference on biodiversity next week on October 28th and 29th. And we're giving away free tickets to those of you listening to this GLF Live. So if you're watching here on our Crowdcast platform, all you have to do is ask a question during the course of the conversation, and we'll be answering those audience questions at the end. And if you're watching from Facebook or Twitter, please ask a question or comment on why you want to attend our biodiversity conference and tag #GLF biodiversity. And please follow us as well, and we will get you your ticket. But for now, on with this GLF Live. We have today with us Paul Chahine. He's a climate finance expert who currently serves as the Sustainability Research Manager at the Luxembourg Green Exchange. And he co-authored a new report, which is being published hopefully next week by the Green Exchange, as well as us at the Global Landscapes Forum, about green bonds. And green bonds, which he will soon explain much better than I can, were created 12 years ago to help channel funding into sustainability projects. And last year, they reached a global issuance of $259 billion US. So we are starting to see them become more of a mainstream financial instrument. But only 3% of the proceeds of green bonds are going toward biodiversity and landscapes, which is the topic of the report. The majority of the proceeds go toward renewable energy projects, building, transportation, other sorts of infrastructure. So today we're going to discuss what this means for our planet. But first, Paul, could you explain briefly in your own words what a green bond is?
Yes, definitely. Hi, everyone, and hi, Gabrielle. Thank you for having me with you today. Well, green bonds, in very easy way, very simple word, is a debt instrument. So it's a bond where the money would be used actually to invest in projects with positive environmental impact. This is in a very broad way. Now, if we go a little bit into details and we see how this instrument is quite identified or defined in the market, we see that we have a couple of principles which govern, the market of green bonds. The most widely used ones are the green bond principles issued by the International Capital Market Associations, or ICMA. And as per their definition, the green bonds are, again, a debt instrument, which the proceeds of the bond will be used exclusively to finance or to refinance in full or in part eligible projects in the environmental areas. So the basic idea is that the money of a green bond should be used only for eligible projects with environmental impact.
Okay, great. And we'll get back to what makes projects eligible later. Mm-hmm. But who are the main purchasers of green bonds?
Yes, very good question. I think mainly institutional investors are the main purchaser or the main investors for green bonds. I mean, pension funds. I mean, like big insurance companies who would invest in these instruments. The market has been growing since its inception in any case, and definitely now even individual investors started to have more awareness about green issues, climate issues. They want to do something for sustainability. They want to be investing their money also in sustainability. So maybe even on an individual level, some individual customers, when they go to private banks, they ask their banks, where your money or where my money, which goes to the savings in the banks, where are they financed? But to a larger extent, it's only institutional investors so far who are the main purchasers of green, but also social and sustainability bonds.
Mm-hmm. Okay, so really bigger investors more than individuals.
Yes.
Mm-hmm. The report states that only 3% of the proceeds are going towards sustainable land use and biodiversity, as I mentioned before. Why is this percentage so small?
Well, yes, I would like just to highlight that the report actually was based on some statistics, the main statistics that you have in the market coming from the Climate Bonds Initiative, States of the Green Bond Market. And for the last 3 years, actually, it's not only for 2019, for the last 3 years, if we see how much the allocation of those proceeds coming from green bonds were going, we see that a very small percentage was going to land use projects, including biodiversity. And the biggest part was going and still going to, big sectors, big polluting sectors, I would say, such as energy and transport. And when we say energy, now in our field, we know that it's renewable energy and energy efficiency, both together. So why it's that small? Because in my opinion, since the beginning, there was such a focus from the green bonds issuers to finance on big polluting sectors, so such as energy and transport, where actually it's much easier to see the impact, it's much easier to quantify the impact. Nowadays, it's very easy. We hear so often people talking about CO2 reductions or CO2 savings. These metrics became much easier to quantify and to identify in these sectors like transport and energy. While maybe in other sectors like the land use, biodiversity, and other small sectors which do not really receive a lot of allocations from green bonds, maybe the situation is not the same. These small sectors haven't yet developed the same way other sectors have developed, and maybe they lack still some infrastructure, some metrics, impact metrics, which investors and attracting the appetite for investors to invest in these sectors. So this is the main. I think this is the main reason why all the other sectors, land use, biodiversity, and all other sectors, don't receive that much. It's only like 20%, I think, from the allocations of 2019. The allocations of green bonds went to finance those sectors, while the 80% went to finance only energy and transport. So we see that the focus of issuers is on these sectors because they are, much more developed. They can see the impact. The impact is quantifiable, and it's logic because we need actually to reduce or to stop increasing the CO2 emissions in order to reach the Paris Agreement climate objectives, and CO2 is, the main actually factor that we have to look at.
Mm-hmm. Absolutely. You mentioned that, investors do like to see the immediate impacts. And when you're investing in things like sustainable land use, it can take decades to see the impacts. Mm-hmm. And there are other risks involved with investing in landscapes and biodiversity. So how do we make this more appealing, or how do we get that percentage higher for investment in landscapes and biodiversity?
I see. Well, I think if some investors are not really, keen or interested, or they have enough appetite to invest in those sectors like land use, maybe another profile of investors should intervene here. And here, I mean, sovereigns who should maybe take care much more than corporates or private sectors issuers in maybe, filling a little bit the gap in investing in other sectors, such as land use and biodiversity. And again, a very important factor, in my opinion, is that we need to put some efforts in developing the infrastructure for those sectors. As I mentioned before, there is still lack of, an impact reporting metrics, enough infrastructure. The landscape approach requires also having so many players around the project, so on different levels. So we need some efforts actually to bring all those together and to have a good business case or business model for landscape approach projects to be financed through green bonds.
Mm-hmm. So a lot of the infrastructure that you're talking about is reporting so that you can see the impact, and then also platforms to bring different stakeholders together. Are those the main pieces of infrastructure needed? Okay.
Yes, exactly.
Great. So the Luxembourg Green Exchange is a subset of the country's stock exchange, and it's focused entirely on sustainable finance. What role has the Luxembourg Green Exchange played in shaping the green bonds market over the course of the past decade or so?
Okay, the Luxembourg Green Exchange, it's still the Luxembourg Stock Exchange. Huh? It's the same exchange. It's not a different market at all. We're talking about the same exchange. That was created in 2016. You know, in 2015 there was a big momentum after Paris Agreement, and just right after that in 2016 the SDGs. So there was, you know, a big international momentum about sustainability and sustainable finance. So it was the time for us, a very good timing, I would say, for us to create LGX in order to filling the gap and bringing more visibility to how the flows of money are being channeled to green projects. And that was in 2016 when it was created only for, you know, to have the green bonds displayed on the green exchange, but little by little we expanded. So now we display also social bonds and sustainability bonds, and funds, also sustainability funds. And with the development that we see in the market, with new instruments, we might be also opening up to host or to display new instruments in the market. How we try to shape a little bit, but we work with a lot of players around the table actually to see how the market is developing and to structure better the market. We are involved in so many working groups related either to ICMA or to the World Federation of Exchanges or the sustainability stock exchanges. We used to be part of the TEG, also working group, so the technical expert group of the European Commission working on the EU taxonomy for sustainable finance. And through all these kind of engagements and commitments, we tried actually to push the market towards more best practice. We didn't stop our work here. We're always members of these groups, but we made a step further because we understood that knowledge is missing in this field. The field is developing quite rapidly, and people are becoming more and more interested. The whole financial sector is becoming interested more and more in sustainability and sustainable finance, and knowledge in this field is quite missing. So we launched an education initiative a couple of months ago, which we call it the LGX Academy, where we try to disseminate the information and the knowledge that we have within the Green Exchange to interested parties, interested individuals who would like to be, you know, learning about this, starting their journey maybe, or changing their career towards sustainable finance. Yeah, and just to mention that LGX was established as you know, the first, but still the only green exchange around the world, and we're proud, actually, very happy also to say that we have a very good market share of the green, social, and sustainability bonds listed around the world that would reach 50% of the international market share.
Oh. And it's great to hear that more young people are interested in getting into this field of finance and that it's growing that way as well. So how are green bonds as a whole growing in awareness and influence outside of just the sector? And what are your projections for how they're going to continue growing over the next 5 to 10 years?
Well, I would say that since the very first green bond was issued in the market in 2007 by the European Investment Bank, and then in 2008 by the World Bank, the market didn't stop to increase. Every year we see new issuances, new issuers, issuances with new currencies, new players entering the market, and the size of the issuances is also increasing, as you have just mentioned at the very beginning of this go live. In 2019, the amount of issuance was or had reached 259 to almost 260 billion USD, with almost 50% increase from 2018. So we see big movement in this field, and this mirrors actually the interest in the market, and that there is a big demand for this type of instrument. It's not only about people being interested in knowing more, but they want really to invest in it, and they look for issuances in different types with different profiles. So the market is growing, definitely is growing, and it will continue to grow. We don't see a reason maybe why. Taking into account definitely that maybe other new instruments might enter the market and might take also or might attract the interest of other types of investors who are looking for something maybe different than green bonds. I wanted to say something and now I forgot about it. It's difficult to say. You asked me how I look to the market for the upcoming 5 or 10 years. Well, it's a big long term, 5 or 10 years, but definitely we see that the market will be growing. We still expect new issuers from around the world to come and to become players in this market. Maybe I haven't mentioned that issuers of green bonds are from different profiles. You have sovereigns, you have sub-sovereigns, you have corporates, you have every type of issuer. Every year we see a new maybe country or new corporate that we didn't expect that they might issue a green bond joining the club with big amounts. So definitely we see that the market will be growing.
Mm-hmm. That's great. And among the issuers, are they quite collaborative with one another in terms of maintaining guidelines or ways to manage green bonds? Or what is the general collaboration process between different issuers?
Well, I believe issuers, when they would like to issue a green bond, they have to decide if they want to follow the principles or the standards which exist in the market, or if they want to self-label the bond as green without maybe eventually following one of the principles. And once they follow these principles, they have to stick to those principles and to follow all the, they have to engage all the reporting requirements they have to have, or maybe to have also a third-party review, such as second-party opinion, in order to endorse their, their commitment and their, what we call the framework, which is the main document a green bond issuer should prepare in advance, in which they have to explain actually how they will use the money, how the allocation of the money is going to happen, to which sectors, based on which eligibility criteria, etc., etc. So I think once the issuers follow one of these principles, they will be doing already a lot in standardizing, let's say, the market a little bit. Other standards in the market also, like the CBI standards, exist, and issuers also follow them. All the standards in the market principles kind of echo each other, and maybe soon also we will have specific standards for the EU green bonds. So the bonds which will be issued following the standards of the European Commission.
Mm-hmm. Okay, thank you for explaining that. We're in the midst of a pandemic. How has that affected investment through green bonds?
A very good question. I think the pandemic, in all its sense, it was a turning point for the sustainability market in general. At the very beginning of the pandemic, like a couple of months ago, we surprisingly started to see an increase in issuances for a different type of instrument, which is the social bonds instruments. And that was the social and the sustainability, I would say, to a certain extent. And that was completely not expected, because the social bonds and sustainability bonds came a little bit later than the green bonds, like 3 or 4 years ago maximum. And the market of social and sustainability bonds was, developing, but slower than the green bonds one. And suddenly, with the pandemic, we saw a big increase in issuances of social and sustainability bonds, mainly because these instruments actually showed enough resilience with all what was happening in the financial markets due to the pandemic. They showed enough resilience to be used by sovereigns and international financial institutions to to raise funds to be used to fight, let's say, the impacts, the social impacts of the pandemic and the economic impact of the pandemic. And here I'm talking about, health issues and employment and, all the other economic and social impacts that the pandemic caused to the society. So, and that actually made some people think that, okay, social and sustainability bonds will take the place of green bonds. It's the end of green bonds. Now it's for social and sustainability. Well, actually, that wasn't really the case. Green bonds issuances continued as they were doing at the very beginning of the year. And we didn't see, for instance, on the level of LGX, any kind of decrease in number of issuances or in amounts of issuances. On the contrary, actually, we saw the load of work, I would say, was more or less the same as we were expecting for the remaining of the year. So now if we put this a little bit in its maybe context of the after pandemic, if we put it in a context of a recovery from the pandemic, we see that the recovery, if we look, for instance, at the recovery plan of the European Union, the recovery is green. So it's a green recovery plan for the European Union. It's not only a recovery plan, which means that green still center of the policies at least at the level of the European Union. So green will continue, and maybe it will expand even to transition finance and to other aspects of sustainability.
Mm-hmm. Yeah, I hope that opportunity is capitalized upon. I just want to go back quickly to one thing you just said. You were talking about how social bonds, social and sustainability bonds were quite resilient. Could you define what you mean by the use of the word resilient there?
Well, they showed that they didn't really went into a lot of pressure due to the to the impact that the pandemic might have had on the market, on the financial markets, and they provided actually a kind of innovators who would like to respond quickly to the impacts, to the social impacts maybe of the pandemic, and later on to the economic impact of the pandemic. So we saw issuers such as, just to give an example, the African Development Bank was among the first issuers of social bonds, specifically to combat the impact of the COVID-19. But later on, we saw even corporates, private sectors, also who started to issue social bonds to finance health research for the vaccines, or to finance the equipment for hospitals and other health-related things.
Mm-hmm. Thank you. And I'll ask one more question before we go to questions from the audience. Mm-hmm. But this report that's going to be released next week, and to those of you listening, you can check back on the Luxembourg Green Exchange site or the Global Landscapes Forum to find that report. But what do you hope the main takeaways are from readers of that report? How do you hope to see it applied?
Well, the paper that would be released next week, and I'm very happy that I had a chance actually to co-write it with the Global Landscape Forum. Actually, it gives a kind of overview of what is the situation in the market now in terms of how to finance landscape approach projects through green bonds. What I would hope actually to see a kind of more awareness that we need to focus on other sectors, not only on energy sectors, transport. Other sectors are also important for environment, are also important for our journey towards reaching the climate objectives of Paris Agreement, and they merit actually a little bit more of interest and focus from investors and from issuers. And I hope that this paper maybe would bring also more debate about the subjects in order to improve the development of these sectors.
Mm-hmm. Great. So we have a question now from Emilio, who is asking, should there be a risk or return discount with green bonds, and why or why not? And perhaps you could speak a bit about what that means as well, a risk or return discount.
Yeah. Well, actually, in terms of the pricing of green bonds, we haven't seen yet in the market any kind of differences in prices between a green bonds and a traditional bond. Maybe there are some couple of individual cases here and there, but there is nothing that would say or that would leave us to make a general assumption that there should be a kind of difference between the pricing for a green bond or for a traditional bond. So no, I would say no, if I understood well the question that Emilia asked.
Emilio, yes. Okay. This is a bit of a more general question coming from a listener, Andrea, and she's asking if there are regions that are the focal points for projects funded by green bonds. So are there proceeds going toward any parts of the world in particular?
Well, proceeds go to everywhere, I would say. It depends. If you are an issuer, if you are an European issuer, it doesn't mean that you will be investing all the proceeds from your green bonds only in Europe. You can invest also in projects outside Europe and everywhere. And there is no one focus. I know that a lot of issuers come from Europe, from Americas, from South America. China is a very big issuer of green bonds. So if you have a map in front of you, you might have, and you want to color it by green, you can start to green Europe, America, Latin America, Asia, and mainly China, Africa, a couple of countries also.
Okay. We have a question from Christopher. In the context of a looming debt crisis in the developing world, may green bonds be used for swapping sovereign external debt into new bonds as part of upcoming restructurings?
Very technical question, and I'm afraid I don't have enough expertise actually to answer it. Definitely I see, but this is a very personal view, I see that green bonds might provide actually, again, a very innovative tool to whatever kind of issuer, so to sovereigns or to non-sovereigns, actually to explore a new way actually to finance projects. Now, to which extent they can use it to fix their debt issues, I don't really know.
Okay. This is a less technical question for you, but a listener, Melissa, is asking, last year, the Financial Times published an article, "Green Bond Market Leaves Wildlife Behind." That's the headline. So it's suggesting that renewable energy has become more easily investable. Mm-hmm. So given the sheer number of projects, how can more green bonds be channeled toward biodiversity in particular? I know you touched on this a bit at the beginning of the conversation, but are there any more specificities of getting more funding toward biodiversity projects?
Yeah. Well, I think this type of articles that you have just mentioned now at the Financial Times might also shed some light that, okay, we have been investing for so long in sectors such as renewable energy, and they became to a certain level of maturity. They're functioning well, everything is fine, and now it's the time maybe to focus on different sectors. But again, I would like to highlight that we are doing all of this because we have objectives at the end of the line, and as long as we still need to reach those objectives, we will still see a lot of investments in big polluting sectors such as energy, biodiversity, and other land use projects, biodiversity, waste management, and all other sectors merit definitely much more focus and much more interest from issuers and from investors, because they still have their say in reaching those objectives, even if the share is smaller than energy and transport and other sectors, but they still have their say, and they merit actually more focus.
Okay. And then our last question is coming from Sarah, And she's asking if you could just give some examples of the types of projects that are currently funded by green bonds.
Well, yes.
A success story or two to end on.
Okay, well, I mean, you have renewable energy projects like wind, wind projects and photovoltaic projects. When we talk about energy efficiency in building, is how to make the building much more efficient in terms of consuming energy and sometimes even producing its own energy. When we talk about transport projects, mainly we talk about public transport projects. So projects where actually you bring people from being using their private cars to using the public transportation more. So, and those public transportation projects are mainly, driven by electricity coming also from renewable energy sources and not from burning fuel or gas or coal. So these are very easy to imagine. Even you can imagine very easily a wind farm project or photovoltaic project. But we can see climate components everywhere. I mean, in waste management projects, you can see it in biodiversity, land use, as we just mentioned, in everything. Now we can find climate components that it can be financed by green finance.
Mm-hmm. Well, they're going to be a very important instrument in the coming years, as you mentioned, as we build back from the economic impacts of this pandemic, and hopefully one that can be used to the best purposes. But that concludes our conversation. Thank you so much. It's been so enlightening to talk to you and to learn more about green bonds and the future of them. And we look forward to your paper next week. And thank you to everyone listening. Please join us next week for our biodiversity event. And we will see you next time on GLF Live. Thank you, Paul.
Thank you, Gabrielle. Thank you for the opportunity.
Sure. Bye.
Bye-bye.